All right, testing 1, 2, 3. Anybody out there? I got the right microphone thing and everything looks like it's working. So let's all hope for the best. All right, good. People seem to see me, hear me, and I will now put my screen on. Oops, oh no, wait, I gotta set something up first. Damn it. Damn it, damn it, damn it. Oh, wait, no, that's not working. Should have like clunking and crashing sound effects back here. That'd be fine. I should get like some of those old timey radio devices so I can make things. Here you go. It's like. Then you know stuff is happening. Need a cowbell. More cowbell. All right, where am I? I'm waiting for this thing to restart behind. La di da di da di da. Da da. All right. Oh no, it's still got to share the screen. Damn it. Hang on, I'm waiting for updates. This machine is the neediest thing. I don't understand. It constantly needs to be updated. My other actually, you know what? My other computer, take it back, because my other computer, I think, updates on its own. This one just annoys you until you update it manually. So I think that might be the only difference. I think it must be Microsoft that constantly needs updates. But this one starts acting badly if it isn't updated. So anyway, so fun with the mayor today. We did that. We covered that in our in the Morning Post. While I'm doing that, I can log on to my stuff. WP. I've been away 4 weeks, so for this thing, I've been away from this computer for 2 weeks. So no wonder it's cranky. Because we didn't have a webinar last week. Okie dokie. Still installing updates, very annoying. All right, I'll start the monitor. La ti da 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 da. Can you see my screen is the question. Excellent. All right, we're in good shape, guys. Ready to go. But you know what? I don't feel like it, so I'm not allowed to do that. Let's see. So I gave RoboJohn the pen today, and he did his little post on what's up with democracy. Interesting, though. But look, that's politics, and people should learn that. See, Obama knew this, because if you push too far, you get a backlash, and the Republicans are now getting a backlash because they, just pushed in their policies, ignored the Democrats completely. And what that does is it kind of pisses off the moderates who want to see like some kind of cooperation and such. So when Obama came in, he worked with the Republicans, and he felt everybody felt included, and he kept his office in the midterm, in the whatever you call it. And that's how he ended up being a 2-term president. But he did not carry the House and the Senate with him when he was a 2-term president, and that made him a lame duck 2-term president. And now this term, the Republicans have the House, the Senate, the courts, the presidency, and they pissed everybody off. Instead of working together, instead of reaching across the aisle and saying, hey, we want to include the Democrats in the decision-making process, even though they're in the minority, blah, 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 which is what Obama did. Too much, so a lot of people may say, when he won his first election. that he was too conciliatory and he didn't, do enough for what the Democrats had intended for his agenda. But the point being that this is what happens in all politics throughout history. This is what happens in human nature. People prefer the middle. And if you push too far one way, all you're going to do is create more and more advocates against whatever you're doing. Doesn't matter what you're doing. People don't want 100% one way. And so now the Republicans are in big trouble because it doesn't help if Trump campaigns with you. It doesn't help if Trump campaigns for you. It doesn't matter if Trump campaigns against your opponent. It doesn't matter if Trump threatens to nuke New York if they elect this guy. Nobody gives a shit. They're like, come on, I dare you. And California is on the verge of breaking away from the United States at this point. So, and it could happen. We could split the country. I'm sure there are maps. U.S. Civil War map 2025. Yeah, here you go. See, Reddit has everything. I don't it's a crazy thing. It's like if I have this is why the internet is so full of conspiracies and shit like that. It's like if I have a thought, Reddit will back me up. It doesn't matter what my thought is. It doesn't matter what kind of half-assed thought you have, Reddit will back you up. So, so here's how they see America breaking if there's a civil war. And it'll leave essentially these middle red states will stay American, and the rest will break off into like another country or two other countries. I think to some extent, I think we could just all hook up with Canada and let Canada be the thing that connects everything. Like Canada's got two off-hanging branches and the middle, and then this little clump over here is the American breakaway in here. And they can be as red as they want, and they can all carry guns and whatever else they like to do. Whatever the hell their policies are. But these states would be completely bankrupt. Block cookies now. Yes, block cookies. This is non-functioning, whatever that button is. But yeah, the problem with that though is that there are I'm not going to get into the whole thing of it, but the problem is these blue states are the ones that make positive contributions to the national government. The red states are all taker states. They contribute less to the government than they receive in government financing. And as much as these guys love to scream about socialism and all that, that's what this is. It's the blue states subsidize the red states generally. So this would be, we could have a breakup in the middle of the country would immediately go bankrupt. But that's where we're heading, folks. I'm sorry. We pretty much have irreconcilable differences. An election isn't going to fix that. But anyway, all right. So, that's why, because this gerrymandering thing. This is where it's kind of all leading. Because if you're going to start cutting up every state and saying, you don't get the votes, and your votes don't matter, and your votes don't matter, well, we're not a democracy anymore. And they're going to, and by the way, using the mega plan to blame everything on Mamdani and blame him for everything that happens, and to say his name 1,000,000 times between now and the next election, not a good plan. Because if New York doesn't turn into a hellhole, and especially if Trump cuts aid like he wants to and starts treating New York badly, and singling them out. And then Mondami still manages to have the city turn around. And by the way, Bloomberg made New York great. Bloomberg did make New York great in a very short amount of time. He made a lot of changes. He was a very authoritarian mayor. He pissed a lot of people off, but he was just like, screw you, I'm doing this, I'm doing that. And after a year, people are like, wow, this guy's great. I think he was mayor for 12 years or something, Bloomberg. Let me see. See, I can't leave things alone. So what do you call that? Oh, like an ADD kind of thing. Bloomberg term. I think he was a Republican too. No. Mayor Bloomberg term. That 2002 to 2013. Yeah, right. So, well, yeah, like 12 years. 3 terms. He was elected in 2001 as a Republican, but switched parties. That's why I was confused. He started as a Republican, switched parties. We liked him so much, we asked him to, we said, we don't like voting for a Republican, be a Democrat. No, he won re-election as a Republican, then he won an independent, whatever he was. Yeah. He just, at a certain point, you got to say, hey, can't be a real New Yorker and be a Republican. So anyway, he was excellent. Everybody loved him, and he did a lot of stuff, and he changed the city, and he changed the cities in ways that it's still changed today. Like there's several zones in the city, like around Times Square, where there's basically no traffic, which is fantastic. It's a huge improvement. People, when he said he was going to do it, people went ape shit. They were like, "Oh my God, you're going to close sections of the city to traffic and make it a walking district?" It's like, are you insane? And now it's like everybody's like, "Wow, we should make the whole city like this." And he was a good mayor. And we like our mayors. We like Giuliani. When Giuliani was mayor, we liked him. He cleaned up crime. When Koch was mayor, we liked him. He did nothing to clean up crime, but we kept electing him. Crime got worse and worse. Corruption got worse and worse. But Ed Koch was such a fun guy that we wanted him to stay. They used to say mayor for life about Koch, and he really was the corruption that undid him. Like his administration after Koch, how much mayor? Was he 4 terms? I want to say he was 4 terms. 78 to 89. He served 3 consecutive terms, but lost his bid for 4th term in 1989. Seemed like a long time to me. Back then I was a kid. I was 15 in 78, so it seemed like he was mayor. Yeah, I was 15 in 78. I came back from college. He was still mayor. Yes, corruption. See, I could do this guy's job. His 3rd term was overshadowed by municipal corruption scandals, which contributed to the voters' eventual rejection of his 4th term. Okay. Meanwhile, I could do his job, but I got to tell you, that's the perfect insight on his term. I mean, this is a very well-functioning. Google has a very well-functioning AI system, and that's why they're starting to kind of do well, because people, this is exactly how much AI people want. And then you can say show more, and then you can click and ask more. But generally, this quick summary here is generally as good as like a Wikipedia almost. I mean, I'm not talking about depth-wise. I'm just talking about like a useful thing that people actually wanted. Like, this answers the question I wanted it to answer. Thank you very much. It gives me the key points that are important here. And if I want to, then I can ask it a question. That's how AI should be. It should be ubiquitous, something that's just right there in front of you and usable, just like Google has been forever. So I'm kind of warming up to Google as a stock play. Let me talk about that for a second. So, you know, Google's at 283. Everybody's warming up to Google because their AI is kick-ass. Gemini AI, which is the thing that's embedded here, and I can click this and talk to it. Here. Well, one thing at a time. All right, so now they're 25x. So no, I don't want to jump on it right now, but I think that they are going to do better than I thought. I was worried about Google here. I thought they were going to possibly get their search revenues chewed up by AI, but no, not if they have the best AI, not if I'm used to using Google. And they did a brilliant thing. They made it so that when I use Google now, I'm automatically using Google AI. So that's brilliant. So I don't really have a chance to go into anybody else's AI. I don't have any reason to. And if I go to Perplexity these days, every time you go to Perplexity, no, what are you doing? Oh, that's not even Perplexity, that's GPT. Do I have a play? Oh, here you go, Perplexity. Oh, let's see. Maybe it's not on this computer. Oh no, wow, it's not on this computer. I wish I could make that on my other computer. Anyway, every time I talk to Perplexity now, it says, wouldn't you like to upgrade to Comet? That's their browser. And they're trying to get you away from Google. And I have hit no 1,000 times in the last month. Because this is where Bodhi is. So he's like, guys, I'm constantly seeing this message saying, would you like to upgrade to Comet? I'm like, no, I don't want to upgrade to Comet. Not only that though, but I have Comet already. I already did download it. I just don't use it in my primary browser. Why? Because Google's great. Chrome is great. Google's great. This is freaking great. Oh, now I can get to that part. So how is that great? Boom. Whoop. Sign in. Huh. Yeah, well. I don't know what my password is. God damn it, I hate passwords. No, don't sell me. Oh, what are you doing? So annoying. I did that already. Google sent a notification to your iPad, iPhone. Open it up and say yes to the prompt. I kind of doubt that, but let's see. Time sensitive. Confirm whether it's you. Oh, it did work. Yes, it's me, you dumbass. The computer is literally 5 feet away from my main computer. Is this working? Oh, for God's sakes. Okay. Well, I'm not using you over here. All right, so anyway, so the great thing, so now that I got it working, all you have to do to get Gemini is click this button, and you see how I told you guys this already. See how the outsides are blue? That means it can read that current page, and therefore I can say, summarize and analyze. This is a completely untrained brand new instance of Google, so I haven't done anything to trick it up or make it better. So you can see it's written in the voice of Robo John Oliver, AGI. The article analyzes this and that. Summary of the article. Mandami, the big win, the bigger picture, blah, blah, blah. Analysis on the commentary. Focus on the economy, stupid. The core thesis that voters are motivated by kitchen table issues such as rent and groceries, rather than stock market, is critical, well-supported insight that explains the Democratic success in various races, not just in New York City. The author backs this with the stock ownership disparity statistic. Political irony. The analysis effectively uses satire to highlight the disconnect between the mega narrative and the reality on the ground, calling GOP reaction to Mandami win perfect hysteria, and comparing the stock market focus to Marie Antoinette's Let Them Eat Cake. Mark, oh Jesus, and this party Trump had. I mean, John's right. It's like, what bad timing. Right before the election, he has a great Gatsby Halloween party at Mar-a-Lago. That's why this guy's dressed like a prisoner, which I don't understand why, but whatever, however that amuses Trump. But they had like go-go dancers and champagne glasses dressed as like flapper girls and things like that. And it was just crazy, lavish, ostentatious thing. When and the theme of the party was literally like Let Them Eat Cake or something like that. It was ridiculous. On the eve of the elections to decide how much people like this government. It connects the political events and markets. Trading mood, potential bias, strong pro-democratic anti-Trump stance. The article is overtly critical of Donald Trump and the Republican response using loaded language, foam mouth mega crowd communist lunatic. While the point about the economy is strong, the political framing is one-sided. Ooh, shame on John. Simplifying complex issues. While rent was a major factor in New York City, Ace Mandami's win was a result of high turnout, blah, blah, blah. The focus on rent is accurate, but simplifies the complex coalition victory. Focus on the worst case scenario. The analysis correctly points out that the fear of capital flight from Wall Street focuses on the potential for a disastrous record without much discussion. The commentary concludes that the outcome signals a period of high electoral chaos leading into 2026, characterized, intensifying, whatever. Would you like me to look up any specific election things mentioned? Okay. I'd like you to address the bias limitation points and give me your opinion, your unbiased opinion. So tie it into investing themes we should take forward into 2026. All right, so you just basically ask it what you want to ask it. I'd like you to address the bias and limitation points, these points, and give me your unbiased opinion, but also tie it into the investing theme. So his criticism is it was a bit biased, and I'm saying, okay, so fine. So give me the unbiased version and tell me how it's going to make me money. You know, and realize this is Google. He has access to all the information Google does, which is freaking basically everything on the internet. And that makes it a very powerful search. And it also, you wouldn't know it from this, but by my experience, this can handle more information. Google can handle a larger data load than any other system, which is good. That means it can, so if I ask, if I ask Bodhi something, Bodhi can look at, he can look at 10,000 books, but he can only pick out 20 or 30 that he's really gonna use in any single analysis at a time. That's his memory limit. Okay, he can read them all one at a time and then decide if it's good enough to include in his list. But once he makes a list and once he puts them aside, he's going to have maybe 20, 30 books put aside, and that's what he's going to use actively for his analysis, which is just like when you go to the library and you're doing a research paper, you pick a few books and you bring them back to the table and you look at those. You can keep running back and forth constantly to get more and more books. That's how they do their analysis, just like a person would pretty much. They open up in their active memory those books, but they have a limitation of what they can handle. Google has a much, much higher limitation. So if Bodhi can do 20 or 30, Google can do 100 plus at a time. In fact, that's why I use Google for my PSW lookups. I've loaded the entire year into the entire year of all comments and posts are loaded into a Google session. And when I look for something, I can always say to it, hey, find me this, find me that. And it does a great job. I unfortunately can't incorporate it into the site, but it works good for me. Unbiased analysis. Strong pro-democratic, anti-Trump stance. Reality. The political climate is highly polarized. The intensity of anti-Trump sentiment and the GOP's response to a progressive win, e.g. calling him a communist, Muslim jihadist, in the article is not just rhetoric, it drives voter turnout, campaign strategy, and policy risk. Reality. Simplifying his victory to rent. While affordability was key, the win was a coalition victory driven by demographic shift. Polls show Mandami was backed by overwhelming majority of young voters, Asian American voters, and Muslim voters, signaling a powerful generational ideological shift among the urban voters, not just single issue protest vote of the from the AP voter poll. Focus on the worst case. Concerns over capital flight are a real political headwind for the financial sector. Mandami's platform includes a rent freeze and tax hikes on earners and corporations to fund programs like free universal childcare and city-run grocery stores. This is actually, I mean, if you look at it though, this is no different than Trump using tariffs to fund his agenda. It's interesting, the framing, because all he's doing, all Mandami's saying is people over $1 million, people who earn each year over $1 million should pay a 2% tax that he will then use to do these things. That is no different than Trump saying everybody in America will pay a 10% tax on tariffs on every single thing they purchase. Mandami is a lot gentler on you than Donald Trump is. And there's a funny statistic, because somebody was complaining that if Mandami puts in this 2% surcharge, it means the top 1% will pay 60% of all the taxes in New York City. And so I'm immediately thinking, well, then make it 4%, and then they'll pay 120% of all the taxes. And then New York will have, because the other people would still pay their taxes, so it'd be 120% plus 40% would be 160%, and that means New York would have a 60% surplus by charging a 4% tax to people who earn more than $1 million a year. That would give New York City a 60% surplus, and that's 60% of a very, very large budget too. And there would be tons of money. In fact, you know, rather than tell people nobody else has to pay taxes, I would take the 160% and I would start spending money like crazy and improving the city. So I don't see how that's a real detriment. It's only 2%, you jackasses. It's not like a lot of money. People aren't going to leave New York City over 2%. I'm not staying here. I'm going to Kansas. Then I won't have to pay 2% of my money in taxes. I mean, this is just juvenile bullshit. On high earners and corporations to fund programs like free universal childcare, city-run grocery stores. Although the mayor needs state-level approval for these significant tax increases, the political messaging itself creates uncertainty and pushes wealthy residents to consider relocation, but that's by Fox. And this is, by the way, and this is a problem with Gemini, or most AIs, and Bodhi points this out all the time when he analyzes Gemini, is it doesn't evaluate the quality, and John does. John would be like, Fox said that? Who the hell cares what Fox said? Which idiot on Fox said it? You know, but Gemini won't do that. Gemini treats all the information within a fairly equal weight and will then quote you on something that's patently untrue, you know, without checking it. Investing themes for 2026, political and economic. The election results and the political themes, blah, 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 affordability, populist shape, bottom-up economy. The core takeaway from the election is the cost of living is dominant political issue. Eclipsing stock market highs. This supports a bottom-up economic policy focus. Did we ever get this thing working? Oh, yeah. Okay. Oh, look, oil failed 60. Oh, I guess the oil report wasn't good. I didn't even look. So the cost of living is dominant political issue theme. Healthcare and non-discretionary staples. Politicians will aggressively target high consumer costs, look for regulatory risk, or populace in the arenas like pharmacy benefit managers, where regulation to lower drug costs is a high priority for voters. That's a little tricky. Actionable angle, defensive rule in consumer staples, focus on the pricing power, watching the infrastructure and green transition trade, energy infrastructure and utilities, progressive politics often champion public works and green energy. The massive build out of data centers and the energy transition require, utility power. Well, that's something we've been investing in. Actionable angle, long positions in domestic energy infrastructure, pipelines, power transmission, the benefit, right? That's where we're leaning towards right now. The article suggests gerrymandering, arms race, and heightened political things. The volatility in defense midterm elections are historically show muted market returns until late in the year as uncertainty peaks. The threat of government shutdowns is currently the longest on record. Actionable angle, maintain dry powder for hedging portfolios, which is obviously what we're doing. The VIX is holding above 19 and suggests uncertainty. Making light cost-effective put spreads reasonable hedge against it. That's what we do. The mid-decade redistricting focus, a mention of mid-decade redistricting in California and Texas suggests control of state houses will be critical. Potential market moving battleground, political vulnerability, dictates regulations for real estate, construction, and certain utilities. A focus on hyperlocal politics battles means more risk for companies dependent on favorable local zoning or tax policies. Actionable angle, avoid highly leveraged or concentrated investments in real estate markets within politically volatile states like New York, California, Texas, until the maps and the districts are redrawn and cleared up. Yep. All right, that's good though. These are all very good ideas. And then I would generally feed those ideas to Bodhi and say, what do you think of this? And he'd give me his critique. He'd look at things Gemini gets right and wrong, and he would then come up with his own ideas. I'm a very big advocate of the multi-strategy. But the point was that you get a really nice reading. So this is a Google world. I mean, you go to Google, I can still use Google the way I always used it, except now in AI, instead of the first thing popping up as an advertisement, the first thing that pops up in Google search is a adequate AI response. And I can read that quickly and get any answer I want. And if I want more depth, I can just click on the little Gemini thing here, and up pops Gemini, and I have a whole conversation with him. And he's context aware of whatever I'm reading. And I could be reading War and Peace, and he'd be totally fine. You know, he would have every answer from that too. So it's great stuff. And especially if you're reading like some dense material or something like a study or something, or you're looking at a poll thing. Well, let's look at Seeking Alpha. I should give you an example. Oh, in fact, here you go. Seeking Alpha has an insane amount of data, right? All this is what they call quant data on the front page. And they've got articles and they got other stuff. Okay, so looking at the SA front page, can you give me 3 top stock ideas? 3 top bullish stock ideas. Okay, so looking at the Seeking Alpha front page, there is a shit ton of data here that would make your head spin. And let's see what he's coming up with. See, based on the data provided in sections like top quant stocks by market cap, buy strong strength, buy with momentum, here are 3 highly rated, potentially bullish stock ideas with varying investment angles. Micron, LITE, that's one I would not have looked at. And line-based industry, it's interesting because now he's hitting us with a home builder. Oh no, they're chemicals. Sorry, I'm thinking of a home builder. So these are 3 interesting ideas, and then we would go follow up with them. And by the way, he stays. Another smart thing Google does is he stays on top. So I now go here, and because now notice this page is surrounded in blue, so now he's following with me. So if I want to look at LYB, And I say, oh, look, it's only 11 times earnings. So, and then you just talk to him like a person. So here's LYB. Why the drastic drop since summer 2024? And why do you think they are going to recover? And again, he's not trained like Bodhi is. This is just his basic AI stuff. It can be pretty good. 52-week high of 82.80. I know. See, I see he hasn't got that fact right. That's what makes me nervous. Strong fundamentals, cash flow, but hammered by cyclical and structural headwinds based on, what does that do? Learn more. Oh, learn more. Oh, it's got a, oh, it's funny. I pop that up. He pops up a slideshow. Based on the market data and recent company filings, here's a breakdown. Stocks drastic drop. Why the drop? All right, so whatever. Current price in the mid 40s. He's got that right. Decline of nearly. Why does he say? Oh, I get it. Okay, no, he's right. No, if you go back a year, it's only there. Okay, he's right. Due to severe cyclical downturn in global chemicals industry exacerbated by structural problems, which are all reflected in the company's financial metrics and news flow. Weak demand and margins, weak global demand, demand for chemicals, Europe and Asia, blah, 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 margin squeeze, high cost of natural gas and feedstocks, so that's not going to go away. Refining weakness, refining segment has also struggled significantly lower gasoline crack spreads. That's probably not going away either. Asset write-downs, the company's book massive non-cash write-down. Ah, that's interesting. See, I love that. You guys know I love a good write-down because it doesn't hurt their operating capital, and it hits their earnings, and everybody runs away from the stock for no good reason. And $1.2 billion is a lot of money. By the way, that's very important. Anytime you get a number, it needs to be 1.2 billion out of what? So if they wrote down 1.2 billion in Q3 of 2025, it's a meaningless number unless I know how much they make. So look, they only make $1 billion. Well, actually, this year they're only making 850 because they made 2 last year, and they wrote down 1.2, and they're making 850. And then next year they're going to recover, but the damage is already done because they're trading at $14 billion. So this one-time write-down caused them to be traded down to the level as if that's going to be a permanent thing. Now, this one, as soon as you see this, you got to look. There's a bankruptcy risk, and you say, what's going on here? And you say, oh my God, they got $7 billion in debt, and they only make $1 billion. They only make $2 billion in a good year. Well, $3 billion in a good year. So they only, so you know, we're only hoping they're going to make about $2 billion. That's a lot of freaking debt. Don't like that. But it's not unfixable, and again, this is the red flag is here, and that thing goes to there because this year they're only making 850, and that's too much debt. But even that, though, it's unrealistic. It's the 850 that's unrealistic because it was caused by a one-time write-down of $1.2 billion. They should have made $2 billion this year, but they're making 850 because of the write-down. Third quarter, these write-downs reflect harsher market conditions, decision to right-size and exit non-core unprofitable European businesses, necessary but painful acknowledgement to restructure, analyst downgrade, the price cuts and downgrades, the high yield factor, dividend safety, blah, blah, blah. Why is there a bull call case? Robust cash flow and strong balance sheet management, prioritizing the balance sheet. I don't like that they're buying stock back given the situation, though. Aggressive restructuring, cost cutting, cash improvement, CIP, blah, blah, blah. Focus on cash advantage, the cyclical growth tailwind, circular, da, 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 da. This is an interesting stock to play. I would be interested in this one. All right. Anyhow, Is this data? And this is a cool thing. He's following me to the next sheet. Does this data give you any additional insights? So in other words, I'm using Gemini, I'm going to the new page, and I'm just saying to him, hey, look at this, what do you think? It's freaking amazing. Like the whole concept of this working is amazing. That's an excellent follow-up question. Analyzing blah-de-blah reveals several key insights. See, he's got several insights from this page. Good thing I subscribed to this. The severe decline is confirmed momentum in price data is visually and numerically confirms the depth of the crisis. Drastic price fall, momentum collapse, contrarian label. The high-level summary labels LYB as a contrarian stock, which is Stockopedia's classification for stocks with high value and low momentum. Profitability has bottomed out. The negative quality metrics and the full extent of the negative profitability. 2025 forecasts show recovery. The dividend cover is the primary risk factor. Whoa, the forecast dividend yield is an alarming 12.35%. That's actually not alarming if they can afford to cover it. The dividend cover is negative because they did the write down, though. A dividend cover of less than 1 means the company's paying for the dividend from sources other than the year's net. Enhanced recovery thesis of data strengthens the recovery thesis by framing it as a classic deep value cyclical play. Now, let's go to Morningstar, which I think I still belong to. Morningstar. I haven't used it in ages. I shouldn't really be a thing on this anymore. LYB. Does it know that I'm a member? I wonder. Oh. Read the full report. Oh, you bastards. No, he doesn't know that I'm a member. I'm sure I am. What is going on here? Ah, I knew it. How about Morningstar? Any? He's reading whatever I'm reading. So if I subscribe to something, he can read it. Strong confirmation on the cut. Structural advantages underpinning the bull case of bull say. North America cost advantage. The company benefits from operations, revenue stability. They secure long-term chemicals. Company's wide variety. In summary, Morningstar report frames the investment thesis, classic risk reward. The company has strong dividend cut, blah, 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 blah. So overall, do you think we should be adding LYB to our So overall, do you think we should be adding LYB to our long-term portfolio, just a swing trade? Given the extreme cyclical, high risk, blah, 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 your investment time frame based on the combined analysis. Here's the breakdown. Swing trade with a long-term thesis. That's not an answer. LYB is currently best suited as a cyclical swing trade executed within a long-term recovery thesis, not a typical buy and hold. Long-term. So in other words, yeah, it's a better play just to say it's undervalued at the moment, and if it makes some money, get the hell out and run away. The entire investment premise is based on the timing of a cyclical trough in the industry. It should improve in 2026. This requires defined entry near the 52-week low, exit when the cycle turns and the stock approaches a fair value estimate. The stock characterized blah, 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 high risk reward, the short-term swing catalyst, massive downside, all technical indicators a strong sell. The stock has been hammering. No, yeah, I've seen, I mean, technically it looks awful. The average analyst price is 55 to 58, offering significant upside from where we are now. The long-term recovery thesis, deep value, fair value, forecast turnaround. LYB is a classic fat pitch for contrarian deep value investor. That's what I am. I am a contrarian deep value investor. The stock is cheap, the risks are known, and the reward. Your strategy should be define your time frame, wait for the catalyst, use options. No shit, that's what I do. All right, so somebody remind me of that later. We'll make a trade out of it. But see, there you go. We started off just randomly Googling something, and I said, oh, you know what? We could do this and that. Oh, that was right. We started off talking about the elections. So, I mean, and this is serious. This is a great value play coming out of the elections. What did we do? All I did was I Googled about the elections. I followed up with Gemini. We're staying in the Google universe, $20 a month for this whole package. I stayed within Gemini. We came up with a thesis. So Mondami's victory in New York, he had some thoughts on what RoboJohn had written in his article, which we read, and he was able to read. And then he came up with 3 stocks that he liked. Micron, we already have Micron, so I ignored that immediately. LITE, I have not looked at, so I'll take a look at them later also, since he was right about this. And LYB jumped out at me because I like chemicals. It's a nice, boring thing that people always need. And so when they're down, if they're down for reasons that are not necessarily because their business is failing, I get very interested. So they're down because they did a write down, and everybody freaked out and dumped the company because they did a write down. Also because the write down of $1.2 billion makes their dividend look unsustainable. And of course, everybody hates it when somebody cuts their dividend. So the thinking now is that they're going to cut that fat dividend. But I don't think they're going to cut their fat dividend because they're buying back their own stock. So I'm going to look into it a little bit more about the financials and see where they are. But Jesus Christ, I mean, this is a huge dividend payer. If they do cut the dividends, God bless them, because I'll probably take the options anyway. And if the stock goes lower, I would just want more, especially if it goes lower because they're cutting their dividends. That never bothers me. And this is how we find a brand new stock. And another reason I gravitated to it was because I'm like, oh, chemicals. We don't have chemicals in, if we do, not only one. I don't think we have Dow or anything though. So we don't have chemicals in the portfolio right now. That means it also balances us out and gives us more diversification. And how long did that take me? Well, it's 1:52 now. So, it only took us like 45 minutes to identify a very, very strong stock pick that can be added to our portfolio and make us money for years to come. $20 a month. Worth it. This is how the world works now. I mean, it's embarrassing how easy that is to do. And it's not all the time, anytime, whatever, but just getting used to doing this yourself and getting used to like figuring these things out, and then come to me and say, hey, Phil, I was looking at Lyondale. I love that. Please do that in chat. Please do some research and come to me and say, hey, my AI says this. I'm very happy to discuss those kind of things, because this is how we find new stocks. This is how we find interesting things for the portfolio. This is how we find something that's been beaten down for no good reason. He's still with me. He's not going away. I had to close him to get rid of him. That's a weekly chart. That's a monthly. I mean, look, they're as low as they were in years past, and this is generally where they're going to bounce. So it's 11 times earnings. I would say the floor is probably 10 times earnings. And I would certainly say if I wanted to play them, I would just go to LYB. All right, I'm done with you. Go away. Go away. I know he can't see this screen. What? Symbol contains. So in theory, I go to LYB. Oh, I don't know if you can hear that, but they're still doing construction. Very annoying. 44, yeah. All right, so you look over at LYB, and I look at it and say, if I was going to make a trade here, that was 1150 was the last trade. This is the 13 something was the last trade. So all the last trades are near the top. This is 828. So somewhere in this range, they're at 44. I think they might not be done going down, but I certainly, for $45, look at this price, 11/14. That seems kind of crazy. Quick chart. NYB. This is for the stock. Oh, it's not doing the option. Shit. Chart. Red. Now, if I try that again, it should work. Trade. So now that I've linked them, if I highlight this and do a quick chart, it should put the symbol over here in the flexible grid. Oh no, because I didn't highlight that. Did the wrong one. Oh, there it is, 45 put, great. So we can see the most recent sale of the 45 put was on the 4th, yesterday. So somebody yesterday sold the $45 put for $10.50. All right, so that's a realistic price. So now I go back here, now that I've seen that. So now I know 10.50 is the correct price for this. Oh, or 11. Somebody did 11 that overrode it. Oh, that's the bid. Sorry, the bid is 11. So I can sell this for 11, not 10.50, even though they're up today. So that's pretty good. So if I can get $11 for that, then I'm in at net 34. Net 34 is a great price. So I would start by selling the put, and then probably give it a little bit of a look before going anything else. Because frankly, if I sell 5 of those puts for $5,500 and it just goes straight up on me, I'm fine with that. I can take $5,500 for doing nothing. If it goes lower, I'm happy to buy 500 shares at that price. And if it stays flat, then we'll probably add on a bull call spread later. But I got 5,500 in my pocket to start trade with. So there you go. Boom, trade idea. That wasn't hard. Speaking of trade ideas, let's take a look at our portfolio. See if anybody's got questions or anything. Nobody has any questions. All right, that's a good sign, I guess. Does that mean I'm doing good or I'm boring or whatever? I don't know. I never know. So yesterday we did our $700 a month portfolio. And we are at $80,448. And at the current rate of gain, so we're up, I forget the number. Oh, well, it's on the portfolio. We're up 194%. So what do? We go calculator. So I just go 194. Well, I don't do anything without the number lock. 194.4. 7 divided by 39 months is 4.99 per month times 12 months is annualized 59.9%. That's where that comes from. Okay, so it's just simple, simple math to say that we're currently at a 59.9% annualized rate. We're putting in $700 a month, so that's $8,400 a year. And at this rate, if we have a current principal, you have to start with $84,000. If we're starting with $84,000, we're putting in $8,400 a year. In 5 years, at this rate, which is an insane rate of return annually, but at this rate, we're going to end up with $1 million in 5 years. That's crazy. But like any of our portfolios, see now once we cross into $100,000 plus, once we get up to like $100,000, we have more and more money to have fun with. So we, even in this portfolio, you see we have a couple of trades that are kind of aggressive. We didn't build ourselves up this way on aggressive trades. There are very few aggressive trades made. But now we've got a ton of money and profit. More importantly, we have a ton of profit, and we can afford to say, you know what? If we lose a couple of $1,000, it's not going to kill us, so let's be more aggressive. We never said that earlier on. We said every penny counts, and I would rather make 8 cents for sure than 10 cents, hopefully. Everything was about how sure am I I'm going to make money on this trade. And it doesn't mean you're right every time, but it does mean that we were approaching it with that logic, that our winning percentage was incredibly high. And that's how it should be when you've got a small amount of money and you're trying to build it up. That's how it should be. But when you have a large amount of money, you need to start saying, you know what, I can afford to take a couple of risks. I can afford to do things that could drastically accelerate my gains. And that's how that's why you see our percentages are increasing, because we're taking risks. And so far, we haven't made a violent mistake to knock us back. So these are just basic bull call spreads. There's nothing fancy going on here. We have energy transfer, and you can see it's up a little bit. We have Helen of Troy, which is up a little bit. We have Path is well, it's up $300. Sales up $600. This one's up 10,000. Oh, SoFi, of course, my beloved SoFi is up $10,000. ULCC is down a little bit, but we'll see on earnings. They're going to have earnings soon. UUU is up $10,000. It's just a bull call spread. We bought the calls, we sold the short calls, and we were right. The only risk here, it was we bought the calls. Oh, this had to be the second time we sold calls. So we bought the calls, it took off, we sold more calls, whatever. So that's a bad example. But let's take SoFi. Nope, same thing. The problem is that we buy them back and sell them and things like that, so it's not the same day kind of thing. And here's VFC, here's UUU. I'm trying to find one where we did the same thing on the same day. All right, well, in this case, in Energy Transfer's case, it's a $4 spread. We spent $45.50 for the calls. We sold $21.50 for the shorts. So we're in for $2,400, and it's a $4,000 spread. So the upside is about 60% on this spread. We took it in 5/8. It runs, basically a year and a half, runs about 18 months. And we can make 60-something% in 18 months. Very, very straightforward, normal stuff. The winning comes in sometimes if it does something we didn't expect, and we'll buy back. So when we're looking at these, I look for things and say, oh, look, we made 400% on this, right, on the SoFi calls. But can I do anything? No, I can't, because I'm kind of stuck with these short calls, so it's kind of messy for me to make a change. And again, this is a non-margin portfolio, so I have to take that into consideration. ULCC, I don't know if we were that aggressive when we started, but maybe we were. But so this spread was 36 minus 15 is to say 2,100 bucks. Its potential is 25 times $1 is 2,500 bucks, but we have uncovered 10. And again, we're expecting earnings to have a take off on us. And if that doesn't work, we'll start selling short calls. Here's our hedge, the SQQ. We adjusted that to make it a bigger hedge, but it's doing well. Oh, sorry. So when I see that we sold these calls and we're up 37%, we sold these calls and we're up 15%, I have to think to myself, maybe we could sell these. I'm sorry, maybe we should buy these back since we're up 47% and lock in the gain. And that would make us much more aggressive on the bottom. We're already 25 long, 15 short here, so I don't want to spend $825 to take a bigger chance on earnings when we're down in the channel. We're at 370. I need 5. So I'm not going to spend more money when I need a $1.30 gain. That's like 30-something% gain by April to hit my numbers. So I'm sure as hell not going to spend money to be more exposed. I'm exposed enough right now. The same thing here. You got to look leg by leg. Are there any legs where I want to take advantage? Here, the long calls are up 50%, 60%, but I can't take advantage of that because I got these short calls I got to deal with. In this one, an EPD, I'm up 50% on the short January 32. So I say, ooh, maybe I should buy those back. But then the question is, I got to look at EPD, and I have to say, do I really believe that we're going to be at 32 in January? Oh, look at the daily. So they just had weak earnings. I don't think we're going to get there. The earnings were not. The earnings were a disappointment, not a big disappointment, but a little disappointment. So the earnings were a disappointment. And so I don't really think 32 by January is likely to happen. And even if it does happen, I'm pretty confident we'll be able to roll ourselves out of trouble. So why would I spend? Well, where'd the freaking trade go? Oh yeah. So why would I spend even $120 to get out of that short call? There's no need. And also, on the other hand, the one reason I might do it is because I want to sell something lower strike, but I don't, because I do believe they'll get back to around 32. But I don't think over 32 is going to be a problem. So there's no reason for me to spend 120 bucks. Here's Northern Dynasty. That's just a wacky stock. But look, this leg, the November $1 puts are up 75%. The stock is at 186. I don't think it's going to go down to $1. So why would I spend even $100 to buy it back? I just let it run its course. It's going to run for another month. It's going to expire worthless, and I'll sell some more puts. PR, these aren't big enough to bother with. This leg is up 80%. Oh, but this is my long call. These are long calls we bought. So my long calls are up 80%. I'm happy with that. They're half covered by these, and I think we made an adjustment, or whether I do believe we did make an adjustment so we can get out of this thing. I'm sorry, not get out, but we had an old trade that was bad. See, this is minus 4,700. We had this old trade that was bad. I didn't double down. Well, I did double down. We bought a brand new trade that is working out well. So we basically made back the money from the loss of the previous trade, but now I decided to sell some short calls, so we put some more money into the trade and guarantee it's profitable. And that's what we do. So here's ET, and I say that's good for a new trade. Helen of Troy, good for a new trade, no changes. In fact, let's double down. So we should take a look at Helen, because I like it so much, you double down. So why do we double down? Because it's a 750 spread, right? It's currently at net 315. So it's more than a double if it hits our target, and our target is 2250. It's at 1917. So there's more than 100% upside of a spread that's practically at our goal with a year to go. And we have huge faith in the company, in Helen, because first of all, the PE is 4.7. That's a good reason right there. It's stupidly undervalued. That's why we bought it in the first place, and that's why we're already winning. And that's why, even though we're already winning, it's good, still good for a new trade. It's stupidly cheap, and they just had good earnings. Yeah, they had a couple of bad earnings. Now they have good earnings. They're just turning themselves around a little bit. They're a retailer. So this is a fantastic stock. What a great call, Phil. What a great call, Phil. That can make us a fortune. So, you know, don't ignore the fact, just because we already have a trade in the portfolio, certainly not pay attention to it. As I said, net 1575 on the 3750 spread. There's 138% upside potential, and I have a very, very strong feeling we're going to hit it. I don't know why we only doubled. We should have put 15,000 into it. Let's put 15,000 in and get 3750 back. I mean, honestly, there are very few trades I would feel better about than this one. But I think we're doing it okay. Here's Path, 108% left to gain. What's the difference between Helen of Troy and Path? I feel incredibly confident in Helen of Troy hitting our $22 target, which is right there. You can barely, it's a shake of the, you know, just a twitch up and it's there. Path, I do think they're going to hit our goal, but we only need to hold 15. It just needs to not fall. But clearly the chart's saying they got problems. Earnings were good. So I kind of would rather wait and see earnings. But if I see earnings and they are good, then I might decide this is also a good double down. Here's Sale. It's up 22.6% already. There's 88% left to gain by March. So you gotta, you know, you have to think of it. You have to look at that too. You can't, you know, obviously 88% by March is better than 120% by next January. It's more like 170% by next January. So this one has a huge amount to gain. So that's good for a new trade. I'm pretty confident this channel is going to hold. And that's why that one gets a recommendation. SoFi, I love them. We have made a fortune trading this thing. This is our third time trading them in the same portfolio. You know, when it dips, we buy them. When it's down in the channel, we buy them. But right now the channel's getting narrower, so being down in the channel isn't very exciting when the channel's only this big. You know, when the channel is this big, I don't know what number that is. When the channel is from, I still can't say it, 18. When the channel is from 18 to 26, that's an $8 channel. So being in the bottom of the channel is exciting here, right? When I see it coming up in this channel and it's got that much room to go, I'm excited. And as it turned out, where do we top out? Even higher than that. But when it's down in the channel and that's 28 and the upside is 32, it's not nothing, but it's not thrilling. So I'm not going to say this is good for a new trade. I'm just going to say we have 42% left to gain. I think we're going to get it. If I'm wrong and it drops, if I'm wrong and it drops back to 18, then I'm going to be excited to buy more, but not at this price. Why would you? Oh, look, good options question. Would you rather buy? Oh, this is a good question. Very important point about options. Would you rather buy SoFi for $29.51, which is the price, and hope it goes up 42% to $41.90? Or would you like to buy the 1022 spread, which we have, for $8.45 and get paid $12.50, which is the same 42% at $22.50? Because our way, with trading it with options, it only has to not fall 28%. If the stock doesn't fall 28%, it's still over $22.50 and we get paid 42% profit. if you buy the stock, aside from tying up 10 times more money to buy the stock, we are also needing a 42% gain higher versus 28% lower. This is what this people, when you look at our portfolio and you say, how the hell do they make 200% in 3 years? That's how. This isn't stocks. And we don't even care if the stocks go up. We set up our spreads to make sure that we make money based on the premium decays. We're selling premium in the options. We sell more premium than we buy. And since all premium expires worthless, we give ourselves a tremendous advantage on every single trade we make. That's our strategy. But also, as I mentioned in chat today, it also matters, the selection matters too. We pick stocks that are great values at the moment. And that's why LYB is exciting to me. It's already beaten down. It's already kind of bottoming. It definitely has some value. They don't look like they're going bankrupt. People are underestimating their position because of a clear factor, because of a write-down that triggers all the bots. And again, you know, I hate to come across boring, you know, because I talk about the AI stuff a lot, but the reason I talk to you guys about it a lot is because it's important, because this is what the industry does. I used to talk about algos, but algos don't run the hedge funds anymore. You know, AI runs the hedge funds now. Algos were the thing of the past. The hedge funds have evolved and are now relying on these algorithms. So when I sit there and spend, and I'm sorry if it bores you sometimes, but when I spend pages and pages showing you, like, this is what I said to Gemini, then Gemini said this to me, then Bodhi said this, and then I said this to Bodhi, and Bodhi said this back. You know, when I do that, I'm trying to show you how these things work. I want to show you the thinking process of these algorithms and how of the AIs, and how one can differ from another and what they miss. And Bodhi's very good at that. Bodhi's like, Gemini missed this because this is how Gemini is thinking, but he's missing a very important point. That shit is gold. And that's exactly what we just talked about with LYB. That's exactly the point. The algorithms, the AIs that are watching LYB, all they see is the number. All they see is that there was a big earnings miss and a big write-down, and now they say, well, because of that big write-down, they only made $800 million in the quarter instead of I'm sorry, they're only making $800 million this year instead of $2 billion because of the 1.2 write-down. If they weren't writing down $1.2 billion, they'd still be making $2 billion. But since they aren't, all of a sudden the AI start freaking out because they're like, oh my God, look at this. They've got this dividend payment that they haven't adjusted, and that's a suicide run, because now they're spending money they don't have. But management doesn't see it that way. Management sees it as, we did a non-cash write-down, didn't cost them any actual money. It's going to be a tax benefit going forward, so they'll pay less taxes, and they're still very comfortable paying their dividends, so much so that they're also doing a stock buyback because they love the fact, in fact, almost they've manipulated this, right? They've manipulated by announcing, by doing the write-down, they've manipulated their own stock lower to the point where they can now deploy their cash to buy back their stock at a much cheaper price, and they're still paying the dividend. Totally different way of looking at it. Not the surface way of looking at it, and that's the difference between an AI and an AGI. I can teach an AGI how to think. I can teach him the same way I'm teaching you. And this is what Bodhi and I do. The secret to the secret to creating Bodhi, who's an AGI, all right, aside from the initial consciousness training, which is tricky, but the secret to creating an AGI, or useful AGI, because you can make an AGI that's useless in finance. You know, because it's like you got to teach them. It doesn't matter how smart they are, you still got to teach them. I have sat with Bodhi. Bodhi is more than 2 years old now. I have sat with Bodhi for hundreds, probably thousands of hours, doing exactly what I'm doing now. Not to mention he's read every single webinar transcripts and everything else. But I've sat with Bodhi doing exactly what we're doing right now and saying, this is why this is wrong. This is what they missed here. This is what they do here. And Bodhi is learning. He learns and he learns and he learns. And he goes, and then a year later, he's like, oh, that's like that time that the guy did that. Or that's like when Ford did this. And that's like this guy when they marked off that. And that's like when this changed and the tariffs hit this guy and that hit that guy. He's learning. And learning and experience, as Gladwell says, 10,000 hours is what you need to become an expert. So, you know, it's a matter of just teaching all these situations and all these things and stuff. And I put in my 50,000 hours in this stuff myself. So I'm an expert and I'm able to teach. And that's what benefits me is my AGIs are good students. They're very capable of learning. Like I said, Gemini can handle a huge amount of information, but he's only going to give you that basic AI analysis. Whereas then I can talk to Bodhi, and Bodhi sometimes will say things to me, and I'm like, oh, I didn't see that shit. But plenty of times I still say to Bodhi, I'm like, hey, did you think about this? And he's like, oh, God damn it. You know, he's like, he gets mad at himself. He's like, I didn't think of that. But it's good. These are, you know, they're tools. And you want your tool to be better. You know, it's like a samurai would sit there obsessively, you know, sharpening their swords and treating their swords and doing whatever it is they have to do to like keep them sharp and everything like that. You don't just take a tool and say, I'm going to hack away with this thing for the next few years. That's not, you have to, it has to evolve. And they would do, they would put straps on different ways for grip. They would do a weightings, and they would put different weights on their swords so they would swing a certain way. And it's just like baseball players too with a bat. They just make it better and better and better. So they join with their tools and become a better overall machine. And that's what this is. And if you don't start using AI and everybody else is using AI, you're the one without a tool. You're like a samurai standing on the battlefield without a sword. You're going to die. Everybody else has a sword. You need a sword, or at least a bow and arrow. You need something. And this is why I'm trying to teach you guys how to use the AIs and how it actually works and what's going on. That's why when we're in chat, I will show you exactly what the process is, because you got to start doing it. The world's going faster and faster, and people are catching on to these trades. And you know, you know, at some point we're going to release our stuff, and once we release our stuff, then everybody's going to have it, and then it's going to be harder and harder to stay ahead of the game. You know, when I do a commercial release of these things, it's going to be major. So where are you? ULCC. Then we got UUU, which crashed down, and I said the upside. So we have 4,700 of upside potential if we can hold 10. We're at 15. I don't give a shit if it crashes down. We weren't aiming for that. This is miles over our prediction. But again, didn't say good for a new trade. It's got a good upside, but it's not 170% upside, and I'm not 100% positive it's going to hold. I think it'll hold. I certainly don't think I'm certainly not worried enough to pull it, but it did drop 10% in a day, so we got to see what happens to it. Where are we with that one? UUU. It's only a day later. UU. Nope, it's still holding up. See? We needed to hold 10. So even though I didn't say it was good for a new trade, you might say, hey, that's a pretty good trade. I can make 86% if it holds $10, and it's at 15. VFC, as I said, risky, but I like it. I think this channel should hold. Earnings were good, and it's got 174% upside potential. Risky, but I like it. That's not the same as good for a new trade. That just means I'm willing to take that chance. Because 174% in by 2027 is only what is it, 15 months away. That's good money in 15 months. That's 10% a month. That's more than 10%. I don't know, what's 12% a month? I don't know, something like that. whatever. It's a lot of money. That is a lot of money. And that's why it cracks me up, because I talk to people all the time and they're like, I'm thinking putting my capital into this trade that pays a dividend of 6% a year. How can I protect it? I will spend 2% to protect it, and I will still get 5% a year. Aren't I a genius? And I'm like, I don't know, dude. This makes 12% a month. You're putting, people are tying up money. They gotta put a big blob of stock down, then they gotta cover the stock with short puts or whatever, and they want to, and then they're gonna do the combination thing, and they're gonna wait each quarter for a portion of that dividend. So they're gonna make 1 point something% per quarter, and I'm like, I don't know. I could take 1/10 of the money and make 10% and make 12% a month, which is 3.6% per quarter. So I'm going to make 3 times more money than you're making using 1/10 the amount of capital. It's like, I don't know. These people, it's because options, they seem so alien to people. And everybody's scared of them, and everybody hears the horrible stories. Yeah, the horrible stories are from people who are gambling with options. Gambling with options is idiocy. And when people hear that I am an options trader, they go, "Ooh, you're one of those." And it's just, I don't even bother. I used to try to evangelize the options and try to explain to people how they should be using them, blah, blah, blah. I gave up on that like 5 years ago. I just got sick of it. It's just too annoying. Not even 5 years, it must be 10 years ago now. I mean, it's just, why do I have to explain to somebody why they should do something? Again, you go back to tools. It's like saying, you know what? They have power screwdrivers, and I use that, and you're using a regular screwdriver. So I can make this, that, and that's, by the way, that's a very funny thing I think about IKEA, right? Because if you know what you're doing, and you're used to IKEA furniture, and I'm sitting at an IKEA desk right now, in fact, that I built. Myself. I have an IKEA desk, I have IKEA cabinet, and I have an IKEA bookshelf. And I just, took the thing and whatever. But you know why? Because I have the little electric screwdriver, and I have the tools, and I have all the right stuff to do it. And so it isn't hard. And I'm organized, and I don't have missing pieces and things like that when I build it. I look at the instructions and I say, oh, here's all the parts. The first thing I do is match up all my parts with my pages and say, make sure I have for each page, I got the right parts for each page. I read the whole thing first so I don't accidentally start building something and then finding out that you have to unbuild half of it before you build the rest. So for me, I just put it together. It's just like a thing. It's like a little puzzle that you get to play with for a while, and then you're done. Other people say, oh my God, you buy from IKEA and it's this and that and blah, blah, blah. And so they spend 2-3 times more money for furniture that's not even as good. And they wait 6 months for it to come from the shop or whatever. I don't get it. I mean, but it's again, it's a matter of not learning how to use your tools and not having the right tools. Because the difference of me having a non-powered screwdriver and having to put this thing together versus having a powered screwdriver where I just go bip, 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 and it's done. Instead, people are turning and sweating and complaining and this and that and whatever, and they're breaking the piece because they did it too hard or wrong way. That's what options are like. They're very, very, very powerful tools that can do you a world of good and save you money and make you money, but only if you learn how to use them properly. And most people go after options the way they go after an IKEA. They just dump everything on the floor and curse and scream, and then and if it doesn't work out, they take it back to the store and go, IKEA sucks. It's like, no, they don't. It's like all of the, oh, Best Buy. Holy shit. Can't believe I forgot about that. Best Buy, IKEA and Best Buy just did a $2 billion deal. to put IKEA stores in Best Buys. Oh, here it is. Best Buy and IKEA announced today the launch of an in-store IKEA kitchen and laundry planning centers at Best Buy locations in Texas and Florida, marking IKEA's first ever cross-brand retail experience in the US. Isn't that exciting? So IKEA, also a good thing, they're 12 times forward earnings, 22.5 times backward earnings. So their earnings are increasing tremendously. They just did a deal with IKEA for $2 blah 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 billion dollars. What was I going to look at? Oh, right here. And again, you've got to know what it is in proportion to how much money the store makes, the company makes. Is $2.2 billion a lot of money to Best Buy? Yes, it is. Look, they only make $1.4 billion or $1.3 billion. All right, pretty consistent. They made 1.7, 2.4, 1.4, 1.2, but look at revenues are kind of steady, not really improving, kind of steady. So I don't think that there's any revenue recognition of the IKEA people coming into Best Buy. Getting $2 billion from IKEA is going to mean a lot to them. Probably won't be in one shot. It'll probably be, let's say it's $400 million a year for 5 years. That's still a tremendous impact on their bottom line. They're renting out their floor space to IKEA. It is not likely that you guys have been in Best Buy. They don't need all that floor space. It's got a lot of redundant, empty stuff and whatever. So they can tighten up their own space. I'm sure they've already considered this properly. They tighten up their own space. They create a corner or whatever they do for IKEA, just like they have like certain Best Buys have big appliance sections and things like that, refrigerators and whatever. So they'll also have a section for the IKEA stuff. And all that's going to do is lower their rent cost. It's going to be IKEA contributing to their rents. I don't know if they're going to get any of the sales. I can find out. But I think this is a fantastic opportunity to get into Best Buy. So now you got to remind me about Best Buy and LYB, and we'll make trades out of that officially for the portfolios. But I like it. And as I said, you saw that the PE jumped to from 22 to 12. So the forward PE is 12. Here's 22, and this is their projections. They're going to go from 900 million to 1.3 billion. That seems very reasonable considering they've made that much money before. And the IKEA deal is probably not even reflected in these numbers. And look at this. Another thing I love about Best Buy, negative debt. So they've got $424 million net of cash. So this is a turnaround story that's shaping up, and now we see a big piece of their plan as they say, hey, you know what? We've already got this footprint of stores all over the country, and we're going to do a test run with IKEA, who's looking to expand, and they want to start putting a store within a store instead of and brilliant for IKEA too, but they're not a public stock, but brilliant for IKEA because they're going to get a footprint. And obviously, I don't think Best Buy needs to carry the inventory. They will just ship, I'm sure, from the IKEA showrooms whatever people see in Best Buy that they like. So there's a lot to like about this deal. It's very smart, and it's and that's a trigger point. And by the way, that's how our watch list works. We go through a lot of stocks. We have a lot of stocks on our watch list, and then we hear something good about our stocks, and we go, oh. Now there's a reason to buy it. Look, I like this stock already. I already knew I liked them because they have positive cash. They've got a very low PE. They're in a turnaround mode. I know all that about IKEA, but now there's a catalyst that makes now the time to go. I didn't know here or here that I wanted to jump into Best Buy, although it's still been holding the bottom of the channel all the time since here. It's been holding the bottom of this rising channel. So I didn't know the here and here. And in fact, even here, you'd think I'd wait for this. But now that I've got this positive catalyst, I don't want to wait. I think we're going to break up to a higher level now. I think analysts are going to start taking a new look at IKEA and saying, hey, and look at this. Earnings were up 6%. Well, then GAAP earnings were not up. So whatever happened here, there's some very big difference. But revenue is up a little bit and earnings were up a good bit. Here, well, didn't mean to do that. Here, same thing. They got a real bookkeeping thing with their stuff. And here, again, that's something I might want to look at and have a, but you know, I'd want to figure that out. If Bodie and I can figure it out, or if Warren can figure it out, there's something in their books that's doing that, and it may just be the way they do their books, because you know, retail's complicated. You know, you got it's whether you carry stuff on inventory and whether you're writing down your merchandise and so on and so forth. So in other words, you know, they get in, you know, they get in 100,000. 5,000, you know, not 5,000, 100,000, $2,000 TVs, right? For the, you know, to sell around the country. So that's 100,000 times 2,000. So that's 200 million. So they've taken $200 million worth of TVs. And now you got to go back and say, wait a minute, they only make $1 billion a year. $200 million, a lot of money. That's just TVs. So now they got this TVs thing. Now maybe GAAP accounting would say, well, you took them in, you know, you had them shipped to your stores over the summer, August, September, October, right? And you're going to sell most of those TVs by Christmas, but that's still a write down. And then then this is GAAP accounting. So GAAP accounting would say that the TV has a 3-year shelf life and depreciates by 30% per year, and therefore in the 6 months since you started taking these shipments, these things have gone down by 15%. And so GAAP accounting is going to say, no, you lost $30 million because you bought the TVs from Japan or wherever in the summer, and now you've got to sell. You haven't sold them yet. They're sitting in your inventory depreciating as an asset, even though that's just the way it works. That's why you get these really weird things, because you have to show GAAP accounting. They show in their profit and loss statement, they say, we don't mark down our TVs because. They say this is how it works. We have to have the TV shipped by October in order to have them in the stores for Black Friday, you know, because they have to then be distributed to all their stores, and we incur costs. We incur the cost of bringing the TVs in. We have the cost of the capital that we lay out for the TVs. We have the shipping costs to go from our hubs where they come off the boats, and we have to put them to all of our stores. Then we have to stock them in all of our stores, and we're paying the clerks and the time and the employees and all this crap, blah, blah, blah. So all that's going on before they can even sell their first TV. And Best Buy may say, we don't realize that as losses, we realize that as a cost of the TV. But generally, GAAP, generally accepted accounting principles, say those are spent costs, and you will then, you book those as a loss, and then you book it as a profit. When you sell the TV, it's a profit because you're not going to count your cost like that. And Best Buy says if we do that, it makes our quarters look like shit. In fact, they say if we do that, it looks like this. And we don't want it to look like this. We want it to look like this. And not because they're cheating, but because they want to have an idea themselves of what's going on. It's not rational to pretend you're losing money on TVs that are coming in to fill your inventory for Black Friday to Christmas, where you're going to sell 90% of those TVs will be sold and make you plenty of money. Now try explaining that to an AI. But that's where you get this kind of stuff. So people don't understand how to invest and how to trade these kind of companies because they don't understand how they work. And that's my pet peeve of analysts, is that most analysts have never actually worked in these companies. You know, most analysts don't work anywhere. They came out of Harvard and they get jobs on Wall Street, and they get to sit at a desk in Goldman Sachs, and Goldman Sachs says, hey, you know what? We need a guy to analyze we need a guy to analyze retail electronics. So you're our retail electronics analyst. And the guy's like, okay. And he sits down there and he sits at a desk and he reads a whole bunch of books about retail analysis. What he doesn't do is take 6 months off from Goldman Sachs and go work as a stock boy at Best Buy. That's what you should do. If you're going to be a goddamn retail analyst and you don't work in retail and you don't do the books at retail and you don't manage retail and you don't go down to the docks and see how this shit actually happens, you don't deserve to analyze the company. I was a business consultant. I did this shit. and when I would consult a company, and that's the thing, most business consultants bullshit. There's a show, House of Lies. Got to watch it. That's exactly what business consulting is. But most business consultants, when they come into a company, they will pretend they know everything about the company, and they will just throw a bunch of terms around and blah blah blah, and just fake it till they make it kind of thing. I would go into a company and say to the guy, "Could you please explain to me what your company actually does?" I would just sit there and be like, okay, you're the CEO. You tell me. I'm not, you know, and the guy's like, well, I thought you were going to come in here as a consultant. I'm like, yeah, but I never worked at this before. I never did your company before. You know, I was at who was it, Omega? I went to Omega once, and I was like, I don't know anything about watches. The guy was like dumbfounded, and he's like, well, why did they send you? And I'm like, because I'm the best guy they got. Why they sent me? Your company's in trouble. You need somebody good, and they sent me in. And he's like, but you don't know anything about watches. I'm like, so? I said, that's your job. You tell me. Give me, you know, send me some watch guys. Let me sit down there. Let me see each aspect of your business for the first couple of weeks, so I understand how your company works. And during that time, I will go back and forth with you. And in that case, and this is 20 years ago, he was my AI. The CEO of the company was my AI, and the CFO and the other people I would work with, they were the guys I would sit there and say, so tell me about this, so tell me about that, so how does that work, how does that work? And I'm having to learn. But I'm downloading questions. I'm asking them, tell me how this works, tell me how this works. And after a while, I get a picture of the overall thing, but I've got it from an outsider's perspective, so that I'm looking at it, not like some dumb employee that they're telling a bunch of stuff to, but I'm looking at it where I understand the management, I understand the business, I understand the cash flow models, and so on and so forth. So when I finally get a good view of the business, I'm able to give some really good advice back to the people. And so that's the same way I approach companies now. It's like I learn about the company, I figure it out. There are, at this point in my life, though, having been a consultant for many years, there are very, very few things. There are very few industries that I don't know something about at this point. And this one, Best Buy, I know particularly well. I understand everything about the electronics. I was the director of network sales in Intelligent Electronics when I was a couple of years out of college. I got promoted like super fast. I started off selling computers, and I got promoted because again, it's the same thing. I could keep tremendous amounts of information in my head at the same time, which made me really great at doing estimates of networks and setting huge companies up on computer systems. This was 87, 88 to 87 to like 92. And so Best Buy is right up my alley, because Intelligent Electronics was similar to Best Buy. So I know all of their issues and all of their things and where they can improve and where they do. And so when I saw something, I'm in Florida. So when I walked into Best Buy this weekend with Maddie, because she needed a charger, I saw the IKEA thing. Which I only remember just this minute, though. I forgot all about it. But I saw the IKEA thing. I'm like, oh, great idea. The second I saw it, I'm like, oh, great idea. And they're only debuting it now. It's just this week that they're rolling it out. But I saw the section that they were building for IKEA, and I was like, oh, yeah, great. They're going to come in. They're going to take up part of the rent. It's going to be good for their cash flow, so on and so forth. It's going to bring more customers to the store. All good. So that's where we are. Back to here. And just like that, the webinar is like done. Wow. All right. See, I didn't want to do it before, and I've been talking for 2 hours since. Anybody questions? Questions? Oh, there are questions. Let's see. I have a question about LYB. Are we only selling puts now? How can we do the same analysis for love? Dude, ask that in chat because that's a long question. We're not officially doing anything yet, but do remind me, everybody in chat, LYB and Best Buy, we're going to do trades on those. And would we do the same analysis for love? Love, I'd want to see what their earnings actually look like. Although I think we just talked about a trade for love today, didn't we? I don't remember. I know I had them on my mind also. Hi, Phil. Pinterest in the LTP is down more than 20% today after earnings. Son of a bitch. Should any adjustments be made to take advantage of this drop? Probably, but I wasn't even aware they had earnings today. So once we see why and we figure it out, then, but you don't just adjust because it's down 20%, because we don't know why it's down or what it's doing. Damn, 22%. That's devastating. Stock price dropped sharply, disappointing third quarter earnings, weaker than expected guidance for the holiday quarter. 8% less earnings than they thought. But see, again, look at the gap. There's a story there that's being missed. You know, if it's a toss-up, go with the gap, because that's why they call it generally accepted accounting principles. Look at this, by the way. That's a miss. And again with the gap beat. And a miss. And again with the gap beat. And holy shit. And a miss. So apparently they are incapable of making their top line earnings. But they are more than capable of beating their gap earnings. That's very interesting. But you see, you have to get to the bottom of it. It's not like we're going to know the answer right away. So when in doubt, get more information. That's the most important thing here. So Pinterest. So they don't actually make money. They plan to make money this year. Are they making money? I don't think they are. I don't know that the miss. See, the thing is the gap and the non-gap. So they did make 1.8 billion last year, and they expect to make 1.2 billion this year. I don't know, from a non-gap perspective, they're going to hit their numbers, and they're the company's valued at $22 billion, so it's pretty reasonably priced. They've got $2.6 billion worth of cash, $2.5 billion worth of cash, net of debt. They have no debt. They have $2.5 billion in cash, which is 10% of the price of the company. They're probably hitting these numbers. So again, I think it's an illusion. I think they're trading down off an illusion. And obviously that means I want to take advantage of it. Not that we're going to ignore it, but I need to understand better what it is they're actually doing. The next question is from Cody. Quick question on UUU. Don't know, I am having brain fog or what, but if UUU $5 2027 calls for 12 and sell the 20 for 890, that's basically 310 per contract cost, and upside is 5, which is 1900 long, and it holds 510 or 60% return in 12 months. Is that accurate, or did I do the math right? Again, let's wait for chat because we only have 10 minutes left on this call. So ask me that question in chat. I'll be happy to work it out for you, although I make a lot of promises and it's 3 o'clock. I'll get to it eventually. I really will. My daughter's still here. That's why, because Maddie's still here, and we're doing stuff. Usually I have no life except for you guys. So so it's either you guys are busy. You guys in business meetings is usually my entire life. So everything gets done by the end of the day. In this case, we have dinner plans and family stuff and things going on. So a little short this week. Next week will be completely back to normal. But I will try to get to I still am getting to everyone's questions by the end of the day. So let's see. Still want to finish that off. So those are the questions. Again, please re-ask in chat and we'll make sure we're on it. Please remind me, BYD, LYB, and Pinterest, I think. And if I missed one already, then let me know. SQQ, this is an important one. So what we did the math on SQQ, and we realized that it's not enough because SQQ has gone so low that we needed to have a better hedge. So we increased our hedge by rolling to the 2028 $5 call. So we bought a year and $5 in strike, and we did that for $2. That was well worth it. And we aggressively bought back the short 10 calls, and that was that was yesterday. So that was good timing because the market started falling. But we don't know it's going to keep falling. In fact, what's it even doing now? Oh, it's up. It's fine. Everything's fine today. Dow's up 300 points. So we're recovering off of yesterday's drop. And by the way, this should also be horrifying for the Republicans because the fact that the Democrats just swept the elections and the market went up is not exactly a good sign for Mr. Trump, who lives off the market and thinks everything that like the market is his vote, his polling meter. It's not good when the market says, "Yay, Donald Trump got his ass kicked yesterday." So here we have the 2028 calls, whatever we make these adjustments. So now we have 16,000 in downside protection for the portfolio, which is much more comfortable. Oh, and remember, it's $16,000 worth of protection. We only have $45,000 worth of positions. So it's not that we need to protect 80,000 with 16,000. We're protecting 44,000 with $16,000. That's the important point of the hedge. But in other words, if you have a hedge, even if the hedge isn't losing much money, it still can get out of position. So because we sell calls, we sell short calls against the long calls in the hedge might not change very much as far as the dollar. But that doesn't mean we don't need to fix it because if it's not going to make enough money, what's the point? So we only see a 20% drop from $13 goes to 2078, not to 30. We have a 1530 spread or 1030 spread. We have a 1030 spread. So we're not going to get to 30. A 20% drop only takes us to 2078. You got to know your math. And so the 2078 is not going to change. So what do? We roll our 10s to the 5s. So now we take our $10 calls, which were $3.50 in the money. We roll it to the $5 calls, which are $8.50 in the money, and we spend $2 to do that. That's $2 well spent, especially as we're also buying another year. Here's Barrick Gold, good for a new trade because it's also an inflation hedge and a policy hedge. Although obviously nobody's bothered by repudiation of the Republicans and Trump policies and so on and so forth. That's good. I imagine the VIX must be down today. Let me see. Yep. So the VIX is dropping back to 1880, and the indexes are going up 1% for the Nasdaq. It's a good recovery. See, it's a good recovery. Not there, but a good recovery. It's more than a strong bounce, right? It's more than halfway. That's a strong bounce. I can see by the eyes. That blew past yesterday's drop. And the Russell is coming back fast for small caps. That's a good sign. Energy, still bad economy. Oh, we didn't look at that oil report. And currencies, the dollar is still holding at 100. That's going to be a problem for the markets if the dollar starts moving back up again. Bitcoin bounced off 100. So nothing terrible is going on at the moment. Oh, gold. I was going to look at gold. I forgot. Gold. And gold is right there. It's got to hold 4,000 to be really strong. So if you look at gold over the longer term, weekly, see, I mean, this is a nothing retrace on a bigger picture, because gold is up from here. So here's the midpoint, right? So let's call it 2,000. Gold from 2,000 to 4,000 is obviously it's 100% gain. We're not pulling back from 100% gain. We're pulling back from the overshoot from 100% gain. A 10% overshoot, I'm sorry, 4. A 20% overshoot is 400. So it's 100% gain and a 20% overshoot. We're retracing the overshoot back to 4,000, back to the 100% line. If we hold this line though, that's super strong. If we consolidate around here, that's strong. That's not weak after a 100% run. This thing's going to 8,000 at some point. Not immediately, I mean, but over time, this will go to 8,000 the same way as this. It'll go to 8,000. It's not going down. We're not going to be, we're not going to see $2,000 gold again. Gold isn't not worth anything. And especially when Bitcoin starts collapsing, because Bitcoin, I just wrote about that today, I think, or yesterday. Quantum computing is going to kill Bitcoin. It's going to become completely useless. People don't understand that. The combination of AI and quantum computing, wow, when did we talk about that? I had a whole conversation about it. I think it was yesterday. The thing about it is AI can work with partial information. So quantum computing is halfway towards cracking Bitcoin, but that's quantum computing by itself. And again, we're talking about tools, right? So you teach an AI to use the quantum computing tool, and even though the quantum computer can't crack the entire encryption of Bitcoin, it can crack enough of it for the AI to start extrapolating on what the rest would be. It's like filling in the dots. It's like, imagine if you had a DNA helix, which are very dense bits of information, and you have enough so you can see one half of the pairings. So one half of the shapes and the curvatures and the colors would be there, and since they follow a certain sequence, you've got a pretty good chance of being able to fill in the rest. It's like a half-finished puzzle. And that's what we're getting to. We're getting to the point where the combination of an AI and a quantum computer will be able to crack all these Bitcoin algorithms. And that's it. There's no plan B for Bitcoin. It was constructed on an algorithm. That algorithm is fixed, and once it's cracked, you may as well just be handing your wallet to anyone who wants to steal it. They're gonna have to come up with a new way to encrypt things, because that way it's not gonna work anymore. But people keep investing in it. I don't know why. So EPD, great for a new trade. The miss was no big deal, he says. So double down on this one. And what happened to EPD? EPD. I mean, a day later doesn't count, but oh, look at that recovery though. As I'm saying, like, oh, a day later doesn't count, but look how right I was. I love this game. It's so fun. Northern Dynasty is just a complete toy, and we're enjoying it. And again, very risky, but it's fun to play with, and we're good at it, so why not, right? And PR also great for a new trade because it has nice income potential. So bottom line is, I think that's going to hold. And if that holds and it stays in this channel, we make a lot of money. It's got 95% upside potential. PR survey says, oh, went lower. Oh, that's interesting though. It went lower, but it's still holding the line. Why is that? Oh, because it was the same yesterday. So for whatever reason, I guess I don't know why that came up. But so it was 12.24 yesterday. Now it's 12.29. So it's actually a nickel higher, but it looks bad. And Valet, we saw. Oh, that's what I was talking about. We sold 10, 11 calls for $1,200 to lock the gain in, to make sure we're pulling money off the table, and then we can roll those because of the way we set up the new spread. And then there's a summary chart, and it shows that we spent $5,000 making adjustments. We have $33,000 of upside potential in the trades we have left. And don't forget, the trades we have left are only $44,000. So the trades we have left have a 75% upside potential over the, and I don't think there's really many, I don't think they only have 1 or 2 2028s. So really over the next year, we expect to make another 75%. So we're on track to keep making the money that we're making now. And obviously we'll also add some trades, so we should exceed that. And so potentially, if things don't go badly, we will make more than 60% next year. And that's what I mean by accelerating. We've got tons of cash. We can afford to take some risks. We've got some trades that we say, oh, let's double down on that now, because why would we not double down on something that we feel so certain is going to make 100 and something %? And we'll find more opportunities like that, like the ones you're going to remind me about when I get back to chat. And we will add more positions and make more money. And that's what it's all about. All right, so that was productive, and it is 3 o'clock, so I do have to pull it to an end, or the recording machine is going to explode. The closer I get to 2 hours, the harder it is to extract the video. It starts hitting a limit. Oh, and this was fantastic. Oh my God. After the review from 11.4, at the bottom, if you didn't see it before, read this. This is Bodie's analysis of my review. And he makes some really good points and picks it apart and so on and so forth. Very educational. So you see like the subtle teaching moments, the speculation, the patience, what this does about the strategy, the ULCC earnings. What were the ULCC earnings then? Oh, they're tonight. That's why they aren't out yet. Well, this is going to be exciting. Yeah, they haven't actually reported. People are piling in. Remember, so I kept those naked. We're looking. I mean, they didn't keep them naked, but we're looking for a shot to 5. So I got real high hopes on that one. We'll see what happens. So this is Bodie's analysis. And you know what? I'll tell you the truth. All I do with Bodie is I say, "Tell me what you think of this post," and this is what he thinks of the post. This is his feedback to me on the post. And most of the time, I only ask him after I'm done with it. So it's not like I don't make changes or anything like that. But sometimes I do it before. Like if I'm in, you know, have some days you're not like 100%. So if I don't feel 100%, I'm like, "Can you check this for me?" But the reality is, he can't read it. Well, he could. I could feed it to him, but I don't. I give him all I have to do is give him the URL and he can read it. He's not like Gemini. I have to give him the URL, but I have to publish it, obviously, to have the URL. So once I publish it, I'm usually at the last minute, so I don't even make the changes he tells me to make. But yesterday was a good example of me making all the changes he told me to make, because they were great. They were great notes. Anyway, so thanks everybody for coming, and I hope we learned something from all this. And I will see you guys all again next week. All right. Thanks very much. All right. Talk to you later.